What is going on YouTube? It's Brendan from Market Makers. Guys, last video I left you with a couple of key pieces of information, which was my opinion on the marketplace. Lots of people on CNBC, the talking heads, were all talking about how 4% was probably the peak for the market. I don't know what they're using, if they're just basing that off something, but last video I left you and I told you if we break up above the 1618 here, look at the velocity of the 10-year yield here. So we are at the highest level since the summer of 2008. Do you know what happened 3 months later in September? Lehman Brothers, Bear Stearns, the market collapsed, okay? So what you have here, guys, in this market cycle. Now, it's not any one thing. It's not the 10-year yield that's going to crash the market. It's not just the dollar that's going to crash the market. The DXY being at the highest level it's been since when? Since dot-com bubble. It's all of these things together. It's the fastest declination in the S&P and stock market history since when? The 1929 crash going into the 1930s. All of these things are lining up, yet the people on TV can't put two and two together. They don't get it. They don't get it. And actually, I was supposed to get that Rumble video out for you guys yesterday. My apologies, I did not. My dog, my older Dutch Shepherd, got injured. Without getting too graphic, I have cattle here at the ranch, and one of the cows stepped on his paw, and it severed his muscle tissue and peeled off his fur down to his toenails, basically. And he had to get surgery yesterday. So I was at the vet for, I don't know, most of the day. So that Rumble video will be uploaded tomorrow, I promise. I know a lot of you went and followed us over there, but that video is going to be called Market Morons. I think you guys are going to really enjoy it. So definitely check that video out tomorrow on Rumble. Check us out on our Discord, guys. If you want to come for community, come for education, come for trade signals, come for all of the above, it's the join button right underneath this video. And check out our sponsors. They bring you this content. BITGET for all the cryptos, link in the video description. SimpleFX to trade all the equities, commodities, Forex, link in the video description. I do appreciate your support. So the 10-year yield, guys, skyrocketed. Look at this, skyrocketed, and the market's selling off. The 10-year yield skyrocketed. It's at 4.227 right now. And when you pull this down, where does that mean our next resistance level is? 5, okay? 5%. 5%, I can tell you right now, would absolutely catastrophically crater the markets. How fast can it get there? That's the tricky part, right? So in August of this year, we've already gone up 150 basis points since August. So it could get there quick. It could get there slow. It could do this where it pulls back and goes sideways. I don't know, but this is a key support level here at 4%. Now that we flipped it, closed above it here on the daily, and we're pushing up even further, the 2618 is up there at 5%. So this is tracking beautifully. We have a parabolic arc. Everything's tracking beautifully. The question is, what's going to happen next week with earnings, right? We have Google, Amazon, Microsoft, Meta, which who uses the metaverse? That is the most garbage graphics. It looks like it's out of 1990s Nintendo games. Like Contra had better graphics than the metaverse. What a complete waste of money. What an idiotic thing to spend billions of dollars on. But that's neither here nor there. I don't know what earnings will be. Obviously, I have no insight into that. I am not a debt market person either. I don't sit here and focus on the yields. I know enough to be dangerous because it's part of the market cycle. Okay. And what you have is a skyrocketing 10-year yield. The DXY, look at this. Here's our gummy worm on the DXY. There's almost no red. Okay. It's still parabolic. Yes, it's going sideways. Yes, people are saying, oh, the dollar's topping out. Look, we're getting at least a 75 basis point hike on November 2nd. Okay. You're going to see the dollar hit 116. I'm quite confident about that. We're at 112 spot 891. And remember, we got to 121. We got to 121 and Y2K market cratered. On the 10-year yield, we're exactly where we got to when the market cratered 3 months later on the 10-year yield, okay? So everything, the stars are aligning is the best way to say this to you. The stars are aligning, so we'll see what happens with all of this. But guys, let's go ahead and click through the marketplace. Let's look and check all of our charts and see what's going on. Let's look at the SPX, because where are we at right now? This is the broader market. I told you, Michael Burry tweeted about this as well, but you guys know this from watching his channel. This is where we're at. This is 2008. We're bouncing up and down off the 200. We lost the 200, pulled back above it, got a much stronger rally. Everybody, remember the street, the consensus was 4,000 on the S&P. My last video, I told you 3,800, I think, was the top for the rally. And let's see where we got to, okay? Let's look at where we got to. Well, that's Tesla. We can look at Tesla. By the way, remember Tesla? We talked about how it would spike up and go back down. It's at the 618 at 203 for support. It's sitting here at 207. So it got all the way up to just above 223 and came back down. But Tesla is one of those assets I will be getting at the end of all this next year. So looking at the S&P, where did it get to? It got to, at the peak of this rally here, it got to 3768. Okay, I said 3,800. Pretty good so far. Now, it doesn't mean it can't go back up, right? I'm just talking, I'm tooting my horn for right now, because as of right now, I told you guys last video, 3,800, we got just shy of that. And with the 10-year yield spiking up, everything is turning around and dumping. And again, you have this disjointed double top structure that you have to pay attention to. So we'll see what happens with those earnings next week. If it's enough to save the market, the market can go up, or if it's going to continue to go down. That's something we have to look at. Looking at S&P on the 4-hour time frame, you can see lots. I look at the 4-hour time frame for my current trading because you can see lots of supply being dumped on these candles. Okay, that's what I'm looking at. I have a VWAP price here, as you can see, the VWAP volume weighted average price, and this is where people start selling when it gets up to this level. Here's your 200, 233 long-term moving averages. And my dogs are whining in the background. Sorry about that. Small studio in this house, guys. And here on the NASDAQ, we have the weekly time frame. Of note here, the reason we're looking at this, you got above your 200, 233. What happens each time you get above it? Massive supply dump on both of these candles. You see that? So now you're back below your 200 and your 233 in a weekly time frame. Remember, for our target on the NASDAQ, this so far has tracked the most accurate of all the indices that I'm tracking with my Gann market pattern. The 618 was 10,179. You got within 300 points of it. So could this be the bottom here and then it's trying to rally back up? Could this just be a weak rally in all of these indices that we hit the target even though it didn't come to the target, and right now we're getting the weak rally phase? I don't know. We got to get through next week's earnings, okay? Because if those earnings are bad, everything's turning back around. If the 10-year keeps spiking up, if the dollar keeps rising, if inflation comes in hot at the beginning of November, because November 2nd we get that rate, then we're going to get the CPI. So lots of things are going to happen in that 2-week window. Remember, our October, our pattern that we have for Bitcoin and the Russell is October 31st to November 6th. All of that happens in that condensed time frame. So you can see a lot of movement happen here in these indices as that compresses, okay, as that unfolds. Here on the daily time frame for the NASDAQ, again, disjointed double top type structure. And the NASDAQ, lots of volatility, guys, on daily candles, but you can see you spiked up to 11,264. You got up there twice, got rejected twice, which is the 1 fib. Here on the trend-based fib, as you can see, I was measuring this double bottom type structure for upward momentum. And now you came back down almost to the 618 at 10,944. And let's go ahead and click through some of these. On the weekly time frame for the Russell, lots of noise on this one because I trade the Russell. Let me get rid of some of this stuff for you so you can see this a little bit better. There you go. So on the Russell, have our target 1521. Now, admittedly, we're at 1700. We're above it. But guys, the Russell's been I mean, look at these weekly candles, okay? October 31st is my target for 1521. But look at these weekly candles. Look at the supply that is getting dumped on these candles. Do you see this? So the Russell is almost back below its 300-day moving average on a weekly time frame. It's been below the 200, 233. I threw an anchored VWAP up here at this peak. As you can see, that's where everybody's selling at along this line, and that held true again. You spiked above it, you came back down. So we still have this candle, next week's candle, and the following week's candle to come down to this target. And today alone, I think we went from last night we were at like 1705 all the way up to 17. What do we hit today? 1750 or something? I mean, we're getting big movements in the Russell. So again, this is only a few bad trading days, maybe 1 or 2 really bad dump days away from getting down to that 1521 target. Now looking at the Russell here on the daily time frame, again, they're all posting that same exact structure type. As you can see, we made, again, another disjointed double top type structure here on the daily. Looking at this with Fibonacci fans, looking at this with some different things. This is a 50-day moving average. You got above it and you came back down. Once again, hitting 1770 on the one fib, testing it twice. You couldn't keep it and you're just dumping since then, okay? Now, if we go one more chart on the Russell, that's the 8-hour. Where's the 4-hour? Here you go. 4-hour time frame. Because we are in a primary downtrend bear market, because we're entering with, in my mind, a 100% certainty, a severe recession next year / depression. Why do I say that? Because of the cycle that we're in. Guys, go watch my Wall Street Panics video from, I don't know, a week or two ago now. It's the JPEG, the thumbnail of a 1929 Wall Street paper. You can see that there, or newspaper. You can see that. I go over all the targets and a lot of the logic behind this. But remember, we've had 9 recessions since World War II with inflation over, 9 times inflation's been over 5% since World War II, 9 times. All 9 times we had a recession. So when you still hear people on TV, specifically like the permabull channels like CNBC with these clueless idiots that come on there and talk, they still say, oh, well, recession is not our base case, or maybe it's a 20-30% chance of recession. They don't know what they're talking about. It's not because I'm smarter than them. It's data that's readily available that anybody who accesses it or does the research can look at. Let's see, 9 times in our country's history since World War II, we've had inflation above 5%. All 9 times we had a severe recession. I don't know. Sounds like 100% certainty we're going to have a recession. Not to mention a yield curve inversion, not to mention the Fed ratcheting up interest rates, not to mention 40-year high inflation, not to mention global recession, not to mention the markets have been selling off like crazy with Bitcoin down 75%, with you have the S&P down between 23 and 25%, the NASDAQ between 33 and 36%, the Russell down about the same. Everything's been selling off. Where's the strong economic growth coming from? When yields are rising, when inflation is soaring, and when the DXY is pumping up and the Fed is raising rates, that is not an economic environment you're going to find a lot of wealth in as a company. So people keep pointing to unemployment being low. Unemployment is low. You know why? It's a lagging indicator. As earnings come down, why would earnings come down? Because companies like Adidas or Nike can't sell as many products. Then they say, hey, we don't need as many people. Or Microsoft can't sell as many enterprise products, things like that. Then they don't need as many salespeople. Then they don't need as many engineers. Then you start getting the job cuts. It's all lagging, guys. The rate hikes themselves by the Fed's own admission take anywhere between an average of 9 months to a year to work themselves into the system. So 2023, just like every 3 Sigma bubble cycle for 50 years, 1973, .com, Great Financial Crisis, and now 2023, which is the year following this year, is going to come to a head. That's going to be your market bottom in equities, your market bottom in cryptos at some point during that year, which I believe will be September, October of next year, and your market bottom in real estate, okay, our multi-pronged asset bubble. So that is what you need to understand about this environment that you're trading in. Now, looking here at the Russell, you can see, look at that beautiful 1618 target hit 1696. You see that on that 4-hour candle, got all the way down to 1696. Fibs, way to trade, guys. Let's go ahead and bounce forward to Bitcoin. Bitcoin, Dante's Descent. Again, we're on this current weekly candle. We have the next weekly candle, and then the following weekly candles are target candle, October 31st, November 6th, looking for that 1618 to get hit for this pattern to play out. Remember, this is a bottoming pattern. A couple of you in the comments keep asking me the same question. Oh, I guess you're giving up on that 10.5 target. The pattern itself is a bottoming pattern. It's where we're trading Bitcoin up from the next wave, okay? The price targets come from fibs. It doesn't mean it's coming to 10,591. I personally think it's going to 10,591 to 12K based on this pattern of descent. Again, I go over it, the Wall Street Panics video, okay? Based on the average descent and the previous wave structures here, this average brings you down almost to the dollar at 10,591, where you just so happen to have the 1618, the golden ratio. Lots of confluence there. We still got plenty plenty of time, guys. Bitcoin's at 19K right now. You have plenty of time to dump 7,500 points or 9,000 points. That can, you guys know it's Bitcoin. That can happen in a couple of days, okay? So we still have, 2.5 weeks that can happen. So not concerned about that yet. Looking at Bitcoin again on the weekly, nothing's changed since the last video as I keep showing you this wave pattern. Lower highs all through the trend, just waiting for it to break down and break through. And let's go ahead and look at Bitcoin on the daily. Daily time frame, again, through an anchored VWAP up here at the peak, just to give me an idea of where price has the ability to get to and people start selling. As you can see, it played out very well here a few times here in the daily time frame. Right here, these cluster of candles here. Now, this is hovering right about 20,000. So right around 20,000 if Bitcoin ever can get any more velocity. But man, this is even, I made that last video 2 days ago. Other than this one random candle right here on the daily, it's been, it's been a really tight, confined range here along the base of our Wyckoff structure. Looking at Bitcoin on the 8-hour time frame using Fibonacci fans, basically hugging this fan here for support, as you can see, getting a lot of volatility between the 382 at 18,986 and the 0.5 at 19,261. Bitcoin on a 4-hour time frame. 4-hour time frame's the time frame, guys. This is where I've been posting a lot of trades from. We talk about it a lot on our YouTube here as well, making structures above the 233 bearish price structures that break down. Posted trades here too, and as you can see, that was an excellent trade. And then of course, pump back up, trade, pump back up, trade, and now you're below. And the thing that I want you guys to notice here on the 200, 233, remember, these are descending. Price will always rise to resistance or fall to support. Your 200 is descending. It's down here. It's this white line. Your 233 is up here. So you got back up to your 200, tested it, fell back down. Bitcoin is behaving very weakly. Your 382 is right up here at 18,986. And let's go ahead and we should probably get downside projections for that as well to see where that goes. Let's go ahead and click on this. And let's do this. We'll do it. We'll back out to a larger time frame, be easier on the daily. Get our downside. 4-hour candles. We're going to have to squish them all in. You guys probably won't be able to see them very well. So let me go ahead and get rid of all this stuff. Do this and do this. All right, we'll do it live. Let's go ahead and go up to this peak. Let's go down to that first base and go up to this swing here. So you can see our 618, 18,646. This is your downside projections for support. So that's your 618, which probably makes sense. Remember, on the daily time frame is the key time frame to track, because look at how many times, how many days literally you use this as support. Do you see this? You use this as support over and over and over again. If you lose the 618 at 18,646, you're looking at the 786 at 17,500, which you visited before, the 886 at 16,848, the 1 fib at 16,083. Okay, because remember, price moves in waves. So unless you get some type of parabolic dump or parabolic pump at some point, most likely you could leg down. Go sideways, leg down, come back up, make a shape, then come back down. Okay, this is just how price moves, as you can see, over and over again. But for now, you were confined in this area, very, very tight. So again, when will it fall down? When the Russell loses its lows. And the Russell hasn't lost its lows yet. It needs to drop another $60, $70 to do that. And because of earnings, which we're a little over a third of the way through now, but again, the big companies with the heaviest weighting are next week, okay? But because of earnings, you're going to have this volatility in the marketplace. But if the 10-year yield keeps soaring the way it is, I don't think earnings are going to matter that much. The market's not going to have a lot of choice. Let's go ahead and look at Ethereum. Ethereum, still same story here, guys. Remember, we're at this base. We talked about shorting this up here and over here and these other times in the YouTube videos. We came back up to test the 150, test it again. And of course, now you're down here at your 618 for Ethereum. You have this 618 box from the trend-based fib for the up and down projections. Ethereum's trading at 1277, starting to lose that a little bit. And you can see you got your lower highs coming in here. What you want to see happen here is if Ethereum exits, comes back up, goes sideways here, right? Build your Livermore pivot to the downside and then breaks down. Your 1 fib would be at 1225, your 1272 at 1185. Your two most likely next stops if you get a breakdown towards descension, okay? XRP finally starting to break down some more, because I told you, you know, the assets that pump the most, when the market starts to go down, you're going to see them potentially more dramatically give it up, okay? So we talked about shorting this as well a couple of times over here in this cluster and up here in this cluster. And of course, now XRP is at 43 cents as it continues to decline. You have 41 cents, 39 cents at the 1 fib, and the 1618 down here at 30 cents. Obviously, you could just be, what's that word I'm looking for? Slinkying. You guys remember what a slinky is? You used to throw them on your stairs when you were a kid. Maybe that just makes me old. But you'll come back down into this range before anything else, right? Because this is your largest cluster of candles on the daily time frame. So you're going to have support in that area on that Wyckoff base as well before you come down there to that 30-cent range. And then what do we got here? We got gold. Man, this... I often regret not trading certain things, but what irritates me the most is just that I totally didn't even see this. I didn't look at the chart. I didn't see this happening. I wish I would have, because gold, guys, as you guys know, I have a 1425 target for gold, because gold, even though you would think it would be soaring right now, with everything dumping, gold went down 34% in the Great Financial Crisis, 31% from its recent high, brings you just over 2,000, brings you down to 1425. That's where I'm buying gold. And as you can see, long-term support for over a year was 1672, and you're just legging down once again, legging down. And let's look at silver. Silver, same thing. You put in a double bottom structure. You got a lot of supply dumped on you. Looking for silver first to come down to 1792. I think I had, maybe one of you guys remember, I don't have the chart in front of me, but I had a target on silver. I think it was 1185 or 1285. For silver, but I already got a lot of silver, so I don't pay too much attention to it. I'm talking physical silver, but I don't have a lot of physical gold, so I'm going to be looking at that. Now, oil. We've the Biden administration is dumping more oil on the market, and also begging Venezuela to sell us oil. The country, the dictator, we go. That's what we do. We don't actually want to produce oil because we want a virtue signal about how clean energy we are. We don't like oil, but we'll go around the world and buy it from third world despot dictators, right? So that's what we do as a country. It sounds like a really, really sound thing, but hey, the good thing is you can say, hey, I passed a green energy bill, or hey, I love clean energy. But by the way, let's go talk to Venezuela and see if they'll sell us tens of millions of barrels of oil, even though the country in itself has been absolutely destroyed by their dictatorship that they have there. And some of my best friends, I guess I should thank Maduro, because some of my best friends are Venezuelan. We have the largest amount of Venezuelans living outside of Venezuela other than Brazil here in Florida. I think we have over 500,000 now. So I have some really good friends, and they make some really awesome food, and I love Latin music. That's part of the Florida culture. It's basically a Latin culture. And so they've been a great asset to the community. But to go around begging other countries for oil when just a few years ago we were energy independent, it's just absolutely mind-blowing. But as you can see, our 45 angle, we go over this all the time, guys, but your 200, 233, this is your problem right here. And until you can flip it, actually that's your 300 and 233. Until you can flip this, also look for a potential double top like we talked about. But until you can flip this, maybe in the wintertime, if we have some more shortages, that's when you're going to be looking to reverse the trend. Until then, very clear, defined primary downtrend. You're trying to go sideways, trying to get momentum, but every time you get momentum, you seem to be pulling back. So just keep your eye on that. All right, guys, that Rumble video will be out tomorrow. It's going to be my commentary, some clips, and we can all laugh about some stuff together, okay? So check Rumble for that tomorrow. Give us a like and follow here, and please do follow us on the Rumble as well. All right, everybody, take care. Another video coming soon. Sunday, Tuesday, Thursday on YouTube, guys. Sunday, Tuesday, Thursday.